Among your stable of advisors as a searcher and CEO, your legal team has to be among the most important. If your experience is anything like my own, you're likely to find that your relationship with your legal advisor will span at least a decade and will touch on every single aspect of the journey, from creating your first legal entity to issuing your first LOI, all the way through to due diligence, acquisition, day-to-day legal questions that will arise during your tenure as the CEO, and finally through to the sale of your company. For these reasons, who you partner with isn't something to take lightly. This is why I'm thrilled to be partnering with Kilpatrick, a law firm that is continuing to build upon a foundation that was created over 160 years ago. The firm has more than 650 attorneys across 22 offices worldwide, with clients ranging from startups and search funds to more than 1/3 of the Fortune 50. Kilpatrick is very active within the middle market, having closed more than $3.5 billion in transactions in 2025 alone. The firm has a dedicated search fund team who works with searchers across the entire lifecycle of the journey, from inception through to acquisition through to exit. When you work with a Kilpatrick search fund attorney, you'll have the confidence of working with someone who has seen it and done it many times before. To learn more, go to ktslaw.com/ETA and tell them that you're a listener of In the Trenches. Hello, everybody, and welcome to another episode of In the Trenches. I am your host, as always, Steve DeVitkos. Today, my guest is Ronnen Harary, the co-founder of Spin Master Toys. For those of you who might be unfamiliar with the company, Spin Master is now the fourth largest toy company in the world, behind only Lego, Mattel, and Hasbro. Ronnen co-founded the company with his two business partners in 1994, took the company public in 2015, and it now boasts a $2 billion market cap and generates $2.3 billion, yes, that's billion with a B, dollars of annual revenue. In our conversation today, we talk about the four major themes that stuck out to me from having a better understanding of Ronnen's career. So first, we talk about youth, inexperience, and how that frames the way that we ought to think about risk. Ronnen regularly argues that youth and inexperience are themselves major advantages. This section should be particularly useful for those of you currently contemplating whether or not to take the entrepreneurial plunge. Second, we talk about tail events. And for those who might be unfamiliar with this nomenclature, tail events basically refer to a small number of outcomes that generate a disproportionate share of results. In Ronnen's case, his tail event was Paw Patrol, a children's TV show that has now generated over $14 billion of cumulative revenue since launch, which is many multiples more than Spin Master's next most successful franchise, which itself was also a huge success. Third, we talk about relationships between business partners. We talk about how he thinks about what makes for a great partnership, the merits and risks of going it alone, and the merits and risks of entering into what I will refer to as an imperfect partnership, which is something that I unpack later in today's episode. And finally, we discuss success, liquidity, and the question of what now. Here we explore how his relationship with risk and ambition have evolved after he arguably doesn't need to take financial risk anymore and has largely achieved most of his original ambitions. But before we get into any of that, allow me to conclude with my usual reminder that I am an active investor in search funds and the small businesses that they acquire through my firm, Mineola Search Partners, which is now investing out of its recently launched second fund. So if you're looking to raise a search fund yourself, or if you have an equity gap, I'd certainly welcome the opportunity to speak with you. But for now, I hope you enjoyed today's conversation with Ronnen Harary. Ronnen, welcome to the show.
Thanks, Steve. Pleasure to be here.
My 7-year-old will be thrilled that I am speaking with you as the person who bought us Paw Patrol, and we will get to that in due time. But for those who are less familiar with your story, maybe you can just start by telling us about yourself, a high-level overview of your career and what you're doing today.
So, as you said, my name is Ronnen Harary, and I co-founded a company called Spin Master back in 1994. We started out with very humble beginnings, marketing a product called Earth Buddies, which was a little kind of like a chia pet in the size of a softball. You put them in water and it would grab your hair. And that was the first product. Our second product was Devil Sticks, which was a three-piece juggling set for kids. And then we had a choice between going into horticulture or toys. So we decided to go in toys, and we started to work with all these toy inventors, which there's a wonderful cadre of about 200 inventors in the world that come up with all these ideas. And we tapped into this incredible brain trust of these inventors, which are not on your payroll. And the way it works with toy inventors is that if you license an idea from them, you pay them a 5% royalty in perpetuity. And so we embarked upon that, and our first big toy was what they called Air Hogs. And then after we followed up with Flick Tricks and got into different categories, and then eventually found ourselves in producing TV shows and digital games and movies, and we consider ourselves a full-fledged children's entertainment company with 3 creative centers, toys, TV, and digital games. And I stepped down from co-seeing the company after 27 years in 2021, and took a long sabbatical for a year and a half, which I highly encourage anybody at some point in your journey. I'm very passionate about sabbaticals and marking off time to do other things in life, because I think if you take sabbaticals, you can actually go the distance. That's a philosophy. And currently I'm chairman of the board, and I spend 30% of my time still in the business, and I run my foundation, and I just wrote a book, and I'm out marketing the book.
Fantastic. Can you give us a sense of the company's size today?
Yeah, currently, we're a publicly listed company. We do just over $2 billion in sales, and we have 28 offices around the world, multiple brands and franchises.
So you were nice enough to send me an advanced copy of your book, which I did read. And first of all, I really enjoyed it. I think that's worth saying.
Thank you.
There was, naturally, as you would expect, there was a lot included in the book, but I extracted from it 4 major themes, and that's kind of how I'd like to structure our conversation today. So I'm just going to bang off the themes before we jump into the first one. So the first one, which I think is kind of pretty evident from the book's title, is basically like youth, inexperience, and how that should frame how we ought to think about taking risk. That was clearly theme number 1. Theme number 2 was tail events, which, is basically a small number of events that explain a disproportionate share of outcomes. In this case, Paw Patrol seemed to be your tail event, so I'd love to dig into that. Theme number 3 was partnerships, relationship with business partners, and I know that you have a lot of history with that. And then finally, kind of arriving at the top of the mountain, like the success, the liquidity, and the what now question. So those are kind of the 4 themes that I really extracted from your book. Maybe let's start with theme number 1. Again, like youth, inexperience, and how those things should shape how we think about taking risk. I think a lot of prospective entrepreneurs spend a lot of time asking themselves, like, am I ready? Right? Whatever the word ready means. And your book basically argues, at least from my perspective, that like youth and inexperience itself is actually an advantage, not like a disadvantage to be overcome. So I'm curious, like, as you look back on your career and your successes, like what percentage of your successes came from things that you learned before starting Spin Master versus things that you learned only because you had started?
Yeah, I think it was, first of all, you only get the realization of the power of the 20s once you get into your 50s or late 40s. So
you have wasted on the young, as they say, right?
It's almost like a retrospective.
Yeah.
And what started to dawn on me was how things came together for us. And so things like everybody's rooting for you. When you're young, people want you to win. They don't see you as competition. There's a whole thing about the power of not knowing. So the ability to not intellectualize things and to go more with your gut and your intuition. And sometimes when you know a lot, it can actually force you to overthink things and then not take the risk in itself. And so for me, it was all about those insights. And I think for us, our whole journey was all about first making the decision that we're going to go into business for ourselves. And then once we decided to go into business for ourselves, we put a couple of parameters around it. We said we want to build the company as big as we can. We want to be open to ideas from wherever they come from, and we're going to focus on it. And wherever that's going to lead us, it's going to lead us. And we basically went project by project. And it was more about leading with excitement and passion and things that we were interested in. And then we got the experience after we got into the doing stages. So one of the things about the power of not knowing, we actually had our first big inventors come to us, and they came to us with this product called the Air Hawk, which was this air pressure plane that you pumped it up and you slicked the propeller and flew around for 45 seconds. This was basically in the mid 90s. And back in the day, you only had rubber band airplanes, or you had Cox airplanes that basically were gas powered and they take your finger off, and you get one flight. So when the two British inventors came to show us the product, we were at the park with myself and Ben, and we flew it, and we were like, wow, this is unbelievable. We ran to fly it again and again and again. And all I was thinking to myself was if I'm 25 and I'm loving this toy, how much more is a 10-year-old going to love it? And that's what went through my mind. But at the same time, we were like, well, it's an airplane. It's going to break. You may have returns. You've got a spinning prop. And we thought about it for a second, but then we said to ourselves, we'll figure it out. And we spent the next few years engineering, developing it. We worked with a company and two companies in the United States that did the drawings and did the prototypes. And I went to China and I found a factory there to work with, did the debug. And we'd never done a complex product like this before. It wasn't even, I wouldn't even consider it a toy. It's like a toy plus. And I'd say a year and a half into the project, we found out that Hasbro and Mattel had passed on it. And we thought we were the first people to see this. And this was a new invention. And little did we know that everybody passed on it. I think that if we'd known that everybody passed on it, we probably would have thought about it a little bit more. And I've had situations later in my career where we've overthought things and we've missed opportunities as a result of overthinking. And so I think that's one of the things, there's a power in a little bit of naivety in your 20s that you can apply. And then we accrued this body of knowledge. We launched it in 1998. The company went from $7 million in sales up to $35 million in 1 year as a result of this product that we spent 2 years working on. And then we took that body of knowledge and we applied it to the next product. And so it's always been a learning experience. I'd say we've always been behind the curve, but we've been students of the toy industry or students of animation, and we're constantly learning and then getting into and applying our knowledge.
What's really interesting about what you just said is the fact that one of your earliest breakaway successes was the very same thing that others that you respected in the industry had passed on. And I'm reminded of a parallel in my own career as an investor. When you look at any given investment opportunities, sometimes knowledgeable, smart people that you admire and respect say no, but you think the answer should be yes. And other times they say yes, and you think the answer should be no. What did that experience teach you about independent thinking, about people playing different games? How have you thought about the information that you glean, or maybe the lack of information that you glean from decisions that other people make?
I think that it's two things. One is careful the people you surround yourself with, right? It's good to surround yourself with positive people at the end of the day. And I do believe that you need to, in our business, it's a bit of an art and science. You do need to know what's been successful, what's in the past, what's been successful, what's failed, what are the reasons for it. I'm a big believer in identifying the white space opportunities and being cognizant of that. So it's a combination of all those sorts of things. But at the end of the day, I think that there's a power in your own internal knowing and your ability to lean into that. And I think that it's the most powerful quotient at the end of the day. And there's so many reasons why people don't do things. And I think that's another thing that's insightful. Like, maybe Hasbro and Mattel had really good reasons to pass. Right? Maybe it wasn't for them at that moment in time.
Yeah.
And maybe they were focused on other things. Maybe it wasn't necessarily the product itself. So it's just, I think that when you glean information like that, I think you've got to really dig deep and find out what are the reasons why, so you don't make a false positive.
Okay, so I get this question all the time. And in fact, I kind of had to wrestle with a similar question many, many years ago. So suppose someone in their mid to late 20s, maybe early 30s, comes to you and says, I have a stable 6-figure job. I have a mortgage. I have a spouse. I have young kids. I want to be an entrepreneur. I'm kind of disillusioned with my quote unquote traditional job, but I basically can't make the wrong decision for practical reasons. how would you coach them through that line of thinking? Are there any like frameworks or structures that you would present them with to help them think through that dilemma?
Well, first, the average age of an entrepreneur is actually 38 in the United States. So they're actually quite young still in their journey. And I think the first question to ask is yourself is, do you want to be in business for yourself? And I think that once you make that decision, a lot of things will start to happen for you. But if you sit on the fence and you wait for the right opportunities, I don't think you'll ever get to the point of actually starting a business, or it will be very difficult. So I think you have to back up and ask yourself that question first and foremost. And then I would say that you know, do you still have a lot of runway room left in your life? I mean, if you work till 60 or 70 or whatever it is. And the question is, how would you feel looking back if you didn't take that opportunity?
Yeah.
I know that's a question that a lot of people ask themselves, but I would encourage people to, I think that it's easier to game out the downside, but it's harder to game out the upside. And I think
Mm.
we're naturally predisposed as people to look at the downside and what are the cons, and you can write the whole list, right? You know all the things that potentially could happen. And one thing is to ask yourself is like, I read Tim Ferriss's book, and he said, can you live with the consequences of what potentially could happen if things go not the way you want them to? So that's another
Yeah.
way to look at it and say, if you can live with that, then maybe that will encourage you to take the leap. But I come at it from more of uh, an intuitive place, and that is that the upside is the most magical thing ever, and you can't actually game it out. And do you want to miss out on the screenplay of your life? And that's the real
Yeah.
question that you should ask yourself. And realize that once you start, the universe is going to meet you halfway, and magical things are going to happen to you. And
Yeah.
the and we you can't write down all those magical things. That's the problem.
Yeah.
So, but if you look at other people's careers and other people's paths, and I would say surround yourself or ask people that took the journey and took the leap of faith, and what happened to them, and what were the magical things that accrued to them that they would have never dreamed that would have happened once you
Yeah.
unlock that decision for yourself.
People presumably who have done it, with the benefit of hindsight, do you regret having done it? Right. And in my experience, the vast majority of people would say, no, I don't regret it, regardless of their outcome.
Yeah, and the other thing is that it's it is a it is for sure. It's something that it's not. What I was going to say is, business is not for everybody. But the one thing you will get once you've made that decision and give it a try, you will know whether or not that path is for you. And
Right.
I think that's an important thing for people to experience. And you can always go back to whatever your other path is.
Yeah. Well, that actually presents an interesting follow-up question, which is like, what's the strongest argument against your thesis? So said another way, like, in what situations would you tell somebody that they should not become an entrepreneur?
Well, I think first of all, I think it's important to also define like what is success for you, right? And everybody's got different definitions of what success is, right? And I think it's important for people to live their life whatever successful. But I would
Hmm.
say, if you're being an entrepreneur, um, if if you can't handle stress well, if you can't handle uncertainty well, if you can't handle responsibility for other people's lives, um, and if you if details consume you, and when I say details, I'm talking about like uh, I would say if you have to have a very optimistic attitude to be an entrepreneur. You have to
Yeah.
have a belief that everything's just going to work its way out. You know, um, coupled with the fact that you're willing to work hard and you're willing to put the time and effort into it and make some sacrifices along the way. I think that's the other thing. It's like you need to make sacrifices. You're going to have to give other parts of your life are going to have to come second as a result of running your own business. So I think it's a combination of uncertainty and sacrifices together. And if you're not willing to make those sacrifices and deal with certain levels of uncertainty, because it's uncertain, right? It's not like having a mapped out career path for yourself. Um,
Yeah.
and if you don't feel comfortable around those sorts of things, then it may not be the path for you.
You mentioned being mindful of one's definition of success. I'm curious, what was your definition of success the day before you started Spin Master, and what is it today, if it's changed?
Yeah, there is two definitions of success. I was very fortunate. I knew when I was 10 years old what I wanted to do. And a lot of it came from the fact that I got identified with a learning disability called dysgraphia when I was 10 years old. And it's the inability to get your thoughts out through your hands. And my handwriting is like terrible. And I have some other spatial awareness issues. So school was like super difficult for me. And I was super lucky to get extra times on my exams and other accommodations. But I knew intuitively that uh, I would be better served being an entrepreneur. And I was waiting to graduate high school and I went to university, which was fantastic because I met my partners there. But I was chomping at the bit to do my own thing once I graduated. I didn't exactly know what it was going to be. I had no idea. If you would have asked me in university if I was going to go into the toy business, I would have been like, it never crossed my mind once, ever.
Yeah.
And it was more about doing and starting something. And as I said, we started with this product called the Earth Buddy. It was the most, you know, humble, simple product that matched where we were at 23 years old. And so I was excited to try something, and we just kept on trying. So for me, it was my definition of success was living the life that I wanted that matched my creativity and my curiosity and my ability to I was always dreaming when I was a kid. Like I just spent the last month in New York and people are like, Ren, do you see the rats in New York? And I'm like, what are you talking about? And I think I'm constantly looking up. Like I'm looking at architecture, I'm looking at buildings, and that's how I grew up. I was always like dreaming and curious. And so for
Yeah.
me, that was my definition of success was living the life that matched with my abilities because I felt for so many years growing up because of having a learning disability, I was mismatched in school. And and then there was also a big part for success for me was having control over my own life.
Mm.
And when I grew up, my parents were immigrants to Canada, and there was a lot of instability in my family in terms of my parents. They had a Persian carpet gallery in Toronto, and my dad was a junior partner. He had profit sharing, and the business closed after 10 years. And then my dad got a job as a VP sales at Sunripe Juice. And I remember as a kid, I was like, oh, that's unbelievable. Like VP sales, big company. And then he got laid off 6 months later. And then he opened this other business and it closed 2 years later. Then my parents got divorced. And my parents were like, they're, they took big risks, but they didn't take the risk in terms of having equity in their own business. And I wanted to have equity. And as a result of having equity in my own business, I wanted to have control. And when I say control, it's like hiring the people that you want to hire, um, creating the culture in your business that you want to create, being around people you want to be around, um, uh, putting your time and effort into things that you're passionate about. And so that was really important to me. And that was my definition of success. It was having equity in something that would accrue to me as a result of my efforts and having control of my environment. And I would say today, my definition of success is actually is two things, and it might shock you, Steve, but it's basically I get most excited when there's products and stuff created in our company that I have nothing to do with. So we created
Yeah.
this product called Hatchimals in 2016. I don't know if you've ever seen it, but it's just basically this
Yeah.
amazing character that comes in its egg, and you hold it and you love it to life, and it feeds on your on the energy in your hands, and this 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 Hatchimal inside he starts to peck, okay, and he pecks his way out, and he can go 360 in the egg, and then you can put him down, and you can put him down for like a year, and nothing will happen, and you pick him up again, and he'll start pecking, and eventually he hatches. And it was one of our most successful products, and I had nothing to do with it. So to
Yeah.
me, that's my definition of success today. And if the company can live beyond the founders, that's the ultimate form of success because we look at companies like Nintendo and Sony and Nike and Ford, and
those companies were able to live beyond the founders and continue to um, uh, thrive as companies and had a mechanism for continued repetition of growth.
Yeah.
And that without the founders, that's what we're trying to do now.
Yeah, love that. I mean, and I think it's also important to highlight for those listening that everyone has their own unique definition of success. My definition of success is, do I like the way that I spend the average Tuesday afternoon? That's it for me, right? And I do. And so everything else is just details, right? But that's just me. Other people have different definitions of success. And I also think that, for reasons that I can't quite articulate, the concept of like money has become almost, an inappropriate answer to success. But I think people need to be honest with themselves. Like if money is a really important part of your definition of success, I don't think you need to judge yourself for that. I think you need to be honest with yourself and act accordingly. I think it's become almost a kind of a bad answer if you say something about financial rewards and financial outcomes being part of your definition of success. But I think my guess is most people have financial rewards at least somewhere in their definition of success. And I think they'd be better served being honest with themselves instead of pretending like it's not there.
Yeah. No, I think you're right about that.
This episode is brought to you by Boulé. Now, for those of you who operate within the search fund ecosystem, you probably already know that Boulé is the standard when it comes to quality of earnings reports, tax, and audit services. But for those of you who are newer to the community, consider this. Over the past 20 years, Boulé has worked directly with hundreds of search funds from capital raise to exit, currently assisting over 150 funds in the search phase and another 125 in the operating phase. They work with searchers across the entirety of the ETA journey, from issuing K1s to your investors during the search phase, all the way through to helping prepare your books for an exit at the conclusion of the operating phase. They are the industry leader in performing financial due diligence and creating Q of E reports that your investors can rely on. They provide a full suite of tax services, both for your search fund and for the acquired company. They perform the annual audits required by most debt and equity investors. And they also perform outsourced accounting services, acting as a fractional bookkeeper and controller for those companies whose needs might not necessitate full-time in-house resources. In short, you can safely assume that these guys get it. They've grown up in the search fund ecosystem over the past 20 years, and they have the reputation to prove it. To learn more, go to bouleygroup.com. That's BOULAY group.com. Okay, so my next question is the role that passion played or didn't play in your decision to launch Spin Master. And the reason why I'm asking this question is because people often say, do what you're passionate about, do what you're passionate about. I spent 7 years selling software to trucking companies. At the risk of like divulging state secrets, I'm not passionate about trucking. I'm not
Right.
passionate about software at all. I was not passionate about the widget that I was selling. I was passionate about the idea of being an entrepreneur, building a business, building something over many years that I could be proud of. You chose toys. Obviously, it's worked out very well for you. What role, if any, did passion play in your decision to get into the toy business?
Listen, I think passion played everything in terms of getting into business and wanting to be in business for ourselves. Um, but the toy business kind of chose us versus us choosing them. Um, and once we met the toy business, we said, okay, we committed to it. It's kind of like it's it found us. But we really loved the creative aspect of producing toys, and uh, we were passionate about like it was the passion was about these physical products and how these physical products came to life. And I think that the toy business was it's actually a way for in a strange way it's like a way for you to relive your childhood. I
Yeah,
actually
totally.
actually
I
I
can
actually
see
didn't
that.
have a lot I actually didn't have a lot of toys as a kid. That's the biggest irony. And I actually don't even have any kids, so it's like I tell people, if you want to be successful in the toy business, you're stuck at seven. Like you think like
Yeah.
a 7-year-old. And there's something wonderful about being having that sense of wonder. And I think it's the most joyful thing to stay young. I would say the toy business and the kids entertainment is one of the toughest businesses. It's super, super, super hard. Okay. Like the pace, the amount of products, the products that don't do well, and the markdowns and the retail and the manufacturing, and there's so many issues. But at the core of it, that magic, that pixie dust, that special aspect of certain toys that we brought to market, whether or not Air Hogs or Hatchimals or Bakugan or Flick Tricks, um, it just gives you this great feeling inside. And
Yeah.
and then when a product goes in the toy industry, it really you get the feedback straight away from the consumer. And I think that is something it's almost addictive in a sense,
Yeah.
when products become successful. So there was a lot of passion around the art of it. I'm also like, I know my business partner Ben, he's super artful, and he loves the art part, and I also like the
Yeah.
art. If you would have asked Anton, he's he'd be more agnostic. For him, it was more about the people. He was really about the culture and the people and the sales, and treating people in the right way.
So what do you think about that wisdom that prospective entrepreneurs seemingly always get of go follow your passion? Like I tend to, here's where I shake out. I would say, A, you don't necessarily need to be passionate about the widget that you're selling. That would be you can be passionate about other things driving you towards your entrepreneurial ambitions. And B, I often say, like, at the risk of semantics, like, follow your curiosity. Don't follow your passion, right? And those are two different things. So that's kind of where I shake out on that advice. Where do you land on that advice that we seem to always hear of go follow your passion?
Yeah, I'm in a similar camp to you. I think again, for the sake of being repetitious, I think if you want to be an entrepreneur, if you want to have your own business, first you have to make that decision. That's the
Right.
biggest thing. And because a business is so many different things, like, you know, the designing and developing of the toy is probably like 30% of it. There's still this other 70% over here, right? And that's the business part of it. So it's more about the business itself. And it's okay to not necessarily be, for some, I think it's a personal thing that you may not be passionate about exactly what you're putting out into the world. For some people, it's super important. So I think it really depends. Um, but you definitely have to be super passionate about business. If you're not
Yeah.
passionate about business, then don't even enter the fray. The other thing is that you can also change your business as you go, right? And you're not committed to that one sector for forever, right? But you accrue this body of knowledge of running a business, and you can translate that into your passion later on. So I think that, but I do believe if you're a certain passion about something, it is a good energizing force to
Sure.
lead you. But I do think the curiosity is is a great underpinning to drive you forward. But I know people don't like to use the word passion, and they consider it like it's just like, oh, so it's like a flaky thing, passion.
Yeah.
But I think it's different for everybody, and I think we need to be careful to uh just apply one definition to it at the end of the day.
Yeah. Okay, let's go to tail events. This is kind of theme number two that I extracted from your book. And again, for those who are unfamiliar with the terminology, a tail event is basically like a small number of events explaining a disproportionate share of outcomes. So in venture capital, it's the one deal that returns 1,000x, though the 20 other deals lost money. So in your case, yeah, at least it seems to me, Paw Patrol was your tail event, so to speak. I think it generated over $14 billion of cumulative revenue since launch. I think it is many multiples larger than the second biggest launch, which itself was very large and very successful. So I think the reality is like most successful entrepreneurs will never create their own version of Paw Patrol. Most investors will never own one. So looking back with the benefit of hindsight, how much of Paw Patrol's success was attributable to like skill and planning versus circumstances that just simply could not have been predicted at the time?
Yeah, I think it's mostly the latter. And Paw Patrol was done in our 19th year of business. So there was a lot of tail events that led up to
Right.
that. I think it's such a great question that you ask, um, because some people just think that it just happened, and it was in our 19th year of business, and there was a lot of stuff before that, and I
Yeah,
think it
your overnight success took 19 years.
took
Yeah.
19 years. And a lot of it was a bit out of necessity because 25% of the toy industry comes from movies and TV shows. So the toys are based on like Spider-Man, Superman, Batman, Harry Potter and stuff like that. And every time we went to pitch for a property, we got turned down. So at a certain point in time, we said to ourselves, let's try to learn the business ourselves and somehow eventually make our own toys. And so we started going to the show called MIPCOM, which is in the south of France. And we went there, and our whole idea was to actually try to get a license for a toy before it even got sold to a broadcaster. It's like super early. And we started going in 2001, and we went every single year. We watched every single episode of content that was ever created as if we were a broadcaster. And we'd spend days and days and days watching children's TV shows. And I think that basically gave us the muscle to understand what we would consider good content that would resonate with kids. Plus, also we were constantly learning what's happening in the marketplace. Um, but the craziest thing happened to us is that in 2001, on one of my trips to Japan, I got shown Beyblade, which I don't know if you know what Beyblade is, Steve.
I don't know.
Beyblade is basically it's a cross between Transformers and Pokemon. It's a spinning top. You rip, it's got a rip cord, and the two tops battle in an arena.
Okay.
And in 2003, it became one of the biggest toys. It's been one of the biggest toys for um, in boys action for the last 25 years. So I got shown this product from Takara Tomy, and I turned it down.
Hmm.
And I went back to Japan 6 months later, and I said to them, "How's it going?" And they said, "Oh, it's going great. We're producing a TV show around it." And I'm like, "Oh, well, maybe we'll reconsider." And they said, "Oh, sorry, it's gone." And we gave it to Hasbro. And Hasbro's gone on to do probably $3-4 billion worth of toy sales, okay, as a result of getting those rights back in 2003 that we passed on. And that moment, coupled with what I described to you before, the necessity to want to get 25% of our revenues from licensed products, um, basically stayed with me. It imprinted with me. And in 2006, a young inventor who's 23 years old came to us with this idea of putting an action figure into a marble. And so that was the genesis of what later went on to become Bakugan. And we basically developed the product. We got it to a point where it was a nice ball, and you open it up and you have to peel the action figure out. But it wasn't good enough. And I went to Japan and I pitched three toy companies in Japan and said, "Would you co-develop it with us?" Two said no. And the third, which is Sega Toys, which was Mr. Kokobun, who didn't speak a stitch of English. Because everything was through a translator. And he said yes. And I came back 3 months later, and they put in this whole pop-open transformation, and you'd roll it onto a card and it would pop open, and you'd battle it out with your friends. So it was kind of like Beyblade, but in a ball format, and it was kind of like Transformers. And I turned to Mr. Kokoba and I said to him, "What do you think about doing a TV show?" And he said, Do you have $6 million? Because it's going to cost 12. And I said to him, "You got to give me 3 months and I'll get back to you." And so I went home and spoke to my partners, and we put the money together. And it was a lot of money for us back then. Um, and came back and said, "We're in." And we created the television show together, ended up selling it to Cartoon Network. It aired for 4 years, 150 countries around the world, and went on to be this amazing billion-dollar success. And then we followed it up with three other TV shows. They all bombed. Okay. You couldn't give the product away. They were stuck to the shelf. Our company
Yeah.
went from $1 billion in sales to $450 million in sales. So we went up like a hockey stick and down like the other side of the hockey stick.
Yeah.
Um, and in the lowest points of our company's history, Paw Patrol was born.
Hmm.
And we were we had just laid off um, 350 people in our company. We did four restructurings. We, on top of the four restructurings, we had lost money for 2 years straight. So this was our 17th year of business and 18th year of business. And for the first 16 years, we always were profitable. So we had never experienced losing money. We had to recapitalize the business. And it was a very tenuous moment in our business career where we really thought about, should we continue? What should we do? Should we sell the business? All that type of stuff. But we dug in and we said we were going to really focus in on um, what matters, and we're going to have less hubris, and not everything we do is going to turn to gold. And we're going to open up our funnel on the top and be very judicious in what we're going to do on the bottom. And so from that, Paw Patrol was born. And and so there was a lot of tail events that led to it,
Yeah.
resilience, learnings, and all that stuff.
Did the success of Paw Patrol change how you evaluate opportunities today? Like, has it made you more tolerant of failures, knowing that one mega success can more than account for dozens of less successful ideas?
I think it's made us super appreciative because we've launched many shows afterwards and they've been great shows, but they haven't connected to kids the way that Paw Patrol is connected to kids.
Hmm.
And so it's made us very appreciative, but there's also been a lot of learnings in what happened to Bakugan and some of the previous shows that we put into Paw Patrol to continue to build that franchise and to make it what it is today.
Hmm. Hmm. Does it, for example, are you more likely today to take a bet on a new toy or a new show or a new property, even if you're feeling a little uncertain about it, knowing that it's basically, it's very, very hard to predict what's going to stick and what isn't, versus, the lens through which you looked at such opportunities 20 years ago? Like, are you willing to take like a greater number of smaller bets now than you were, let's say, 20 years ago?
It, from a product perspective, it's quite the same. Um, but it's changed. We've done a lot of M&As in the last 10 years. And so now it's moved from, you know, um, making bets on products and also to making big decisions on companies to acquire.
Yeah.
Um, and so it's shifted. But I think that deep in the culture is that um, DNA that we're open to ideas and we are always pushing the bounds of what's possible and trying. And so that's very much consistent today. I'd say we're slower than we used to be, which is something that happens when the company grows.
Yeah.
And we need to fix that. Uh, but the appetite to constantly get into new categories, we just bought a company called Melissa and Doug a couple of years ago, and that was
Yeah.
um, a step change for us in terms of recurring revenue and buying a brand that's got like high brand awareness,
Yeah.
and a completely different profile of play. So we're constantly taking our shots.
Prior to launching, did Paw Patrol look obviously different from other products internally, or did it initially look like just another promising idea in a long line of promising ideas?
It was first of all, it wasn't necessarily an idea; it was a creation
Hmm.
that evolved over time, right? So the idea for Paw Patrol was originally a brief that we sent out to five creators, and Keith Chapman came back with this idea. It was originally called Robbie and the Rescue Pups. And so it was all about Robbie and him um, solving issues that happen with five different puppies, and each puppy has their own archetype. And so we love the conceit of it, but it's one thing to have a conceit of an idea, and it's another thing to design and develop the characters that are appealing to kids, and then to write the story, and then to have incredible directors direct the pacing of the show, and to add in the play patterns in terms of the vehicles and transformations and all that type of stuff. So it wasn't like here's an idea and everything's packaged and just say yes and everything's going to work out. It was really it was a 2 year creation journey.
Yeah. Let's go to business partnerships. You mentioned your business partners a couple times now, so I want to dig into a couple different aspects of good versus bad business partnerships. And again, a FAQ that I get from a lot of aspiring entrepreneurs sounds something like, "Hey, I'd love to do this, but only if I can find the right partner." How should a prospective entrepreneur think about that problem? Is waiting for the perfect partner a legitimate strategy, or is it a kind of veiled form of procrastination in your experience?
I think it's a veiled form of procrastination. I think that again, I go back to the original premise of like, do you want to be in business for yourself? And is that a career that you want to take? And if you have a business partner that matches up and aligns with you, that's fantastic. If you don't, why should that hold you back at the end of the day? Right? Like
Hmm.
what are you missing? And it doesn't mean that a business partner can't come later on either, right? It can come later in the journey. Lots of times people come a year later or 2 years later, or if anything, it could be a plus because you're you own 100% of whatever you started, and you actually have more equity to give away to other people that are going to join you along the journey. And you may have other people that join you along the journey that are super valuable and bring a lot to the table, and you're going to want to, and you have an upside where you have more equity to give away to incentivize those individuals to contribute to your business. And giving people equity is one of the biggest unlocks of it's the biggest intangible unlock that you can find. um,
Yeah.
and those people can turn into business partners, and even if they don't have the same equity percentages as you, if you treat them like a business partner, you're going to get magical results as a result of it.
Um, I suspect your answer to the following question is going to be both, but I'm going to ask it anyways. When one works with a business partner at a very, very high level, there's kind of two forms of help that they can receive from a business partner. One would be commercial help. Hey, there's three of you instead of one of you. I'll do sales, you do accounting, you do whatever. Um, the other bucket is like emotional help. Someone is in the trenches with you. They understand what you're going through. You have a shoulder to cry on. You can commiserate with each other. You can celebrate with each other, etc. I know you've gotten both benefits from your business partners. But can you just kind of riff on this idea of there being two buckets of help or benefit that one gets from a business partner? And has one proven to be more meaningful than the other in your experience?
Yeah, I think the key thing is to have a mind meld with your business partner, and that's someone that you when you're discussing the issues of your business, you guys can really, or individuals, you can really connect, and you're on the same wavelength. And it's like having an incredible tennis partner that you're and an incredible rally, right? And everything's just going back and forth and back and forth and back and forth. And there's very little starts and stops. And so that mind meld to me is the most magical thing for one to have in a business partner. Yes, you can have the support, but you can get emotional support in many different places in your life. The
Hmm.
question is, can you have a synced up human that you can banter the ideas with? And then not only can you banter the ideas with, when the right idea pops on the table, is there low enough ego sitting on the table that you can go with the right decision and move forward at pace. Um, so I think those are the key things that are important, I'd say, to for myself in a partnership. Um, and yeah, those that to me is like the foundation of everything. And then the other thing is do you have the same desire, and are you heading in the same direction? And I think that's really, really important. And I'd say it's even less than the thing that you brought up, having three people, one do sales, marketing, this and that. It's like, do you guys have the same vision for where you want to go? Because that's going to be able to take you through the hard times. And that's going to also equalize out things like work ethic, which is super important.
What do you think is more, I'll use the word dangerous because I can't think of a better word, but what do you think is more dangerous? Pursuing entrepreneurship alone, even though you have reservations about doing so, or entering what I'll call a less than ideal partnership? And maybe less than ideal means your skill sets aren't that complementary. Maybe it means like it's a relatively new relationship and you don't know each other super well. Like which one do you think is more dangerous?
To me, it's entering a partnership. It's like a marriage. That's a big decision. And it will affect your health, and it will affect your mood, and it will affect your life. You will not be having pleasant Tuesdays if you don't have the right partner.
Yeah.
So to me, it's a hard no. I think that's a huge risk to take, and I wouldn't take the risk because, like again, back to our conversation, like you want to enjoy the journey. It's hard
Yeah.
enough it's hard enough as it is. So I would rather go it alone personally than jump in with someone where I got some flags and it's questionable. You may want to try, you may want to do like a project with the person and try something for 6 months or a year and see how it goes. But if you do have any reservations, I would do a bit more of a trial situation and get some
Yeah.
more in there.
What are some early signs that two people are likely to be exceptional long-term partners, if such a thing exists? And maybe conversely, are there any signs that you'd look out for that two people should absolutely not be business partners?
I think it all comes down to communication. Can you communicate? Can you fight? And do you have the ability to say sorry?
Yeah.
Right?
Fighting
You,
well, yeah.
I would say that the one thing that kept our partnership going, and I have two partners, so it's like three is even it's super complicated to manage three.
Yeah.
We had a couple rules in our business. One was no talking behind anybody's back. And the other one was always apologize. And I, even if I didn't get the apology, I asked for it. And then I felt better as a result of getting it. And so we always cleared the air. And I think uh, saying sorry, communicating is everything, and then having the ability to like enjoy the enjoy the upside conversations with your business partner, the ability to
Yeah.
dream and to uh, not only the issues that you're facing, but the what's possible. And I think that's super exciting at the end of the day.
This episode is brought to you by Oberly Risk Strategies, the insurance brokerage and insurance diligence provider that's been trusted by investors, lenders, searchers, and CEOs for over a decade now. The company is led by August Felger, himself a two-time searcher within both the funded and the self-funded models. He personally runs Oberly's dedicated search fund practice that works with searchers across the entire diligence, purchase, and post-close process. Their diligence offering, which is completely free, by the way, will assess your target company's insurance program and will summarize any potential coverage gaps, the pro forma insurance pricing, and any changes needed for closing or shortly thereafter. In 9 out of every 10 client engagements, they're able to either reduce spend or improve coverage, all in such a way that the searcher or CEO can focus on other things while Oberly handles all things insurance for them. Oberly has serviced over 900 customers across a decade of operation and has an NPS score that puts them at the very top of their industry. But don't take my word for it. Click on the hyperlink located within today's episode description, and we will gladly put you in touch with as many happy Oberly customers as you'd like. So if you were to, let's say that you are advising newly formed business partners, two young entrepreneurs who don't have a ton of experience working together, and I were to ask you to create like a partnership playbook that represents like the best of partnership hygiene based on your experience. I'm curious, like, what do you think is on the must-do list? I mean, certainly it sounds like apologizing when you make a mistake is one, say everything to the person in question, never behind their back is another. What else would you put on that list of like things that you must do in the spirit of like the best partnership hygiene?
Work on your ego. That's a big one. Um, being able to recognize through the discussion what is the best way forward. And then I would say the fourth one would be no blame. The one thing about our business that I'm super proud about, especially if you're in a creative industry, but I would say like almost in any business, like there's never one person that's responsible for a success or a failure. And so I would not attribute any blame to one individual because
Yeah.
it's very corrosive. We have so many products that failed in our business. We had a string back in the 90s after Air Hogs. We had Don't Free Freddy, Key Charm Cuties, Tickle Secrets Babies, like three products in a row we put so much time and effort into, and they completely, they bombed. No one liked them. And so, I will never forget, Steve. Okay, when we launched Don't Free Freddy, I we shot a commercial and I saw a kid watching the commercial and I saw his face. Okay. And his face was just like it was blank. And I knew right then and there in that moment, okay, that that product was not going to go, and it didn't go. And there was no blame that we attributed to anybody in our in I didn't attribute to my partner Ben or Anton or to anybody else that worked on the product, because I was cognizant of the fact that there's so many elements that go into that decision and the execution, et cetera, et cetera. And then the same thing with the upside. You know, there's no one person. I mean, you look at Paw Patrol, there's no one person that is responsible for that success. I would probably attribute it to about 15 individuals,
Yeah.
or maybe even 100. Like there was 100 animators that worked on it. They get a lot of credit for it. So it's like, so I think that it's celebrate your upside, but don't attribute it to one, and don't attribute failure to one
How
person.
about at like a very tactical level, like in the spirit of maintaining a healthy partnership? Like, did you have, I don't know, weekly meetings? Were you guys in entrepreneur support groups? Did you guys have coaches? Did you guys have like an agreed upon process for resolving disagreements with each other? Like at the most tactical level, what stuff worked for you and what stuff maybe didn't work for you?
Yeah, we had a weekly meeting. We called it the partners meeting, and we met every single week religiously, and we'd bring issues and topics, and we would just talk it out in that weekly meeting. And so that was a good catch-all for resolving business issues, but also emotional and sensitive partnership, how
Yeah.
people feel about certain things. And so I would say that was the most powerful. We never put it like, processes, rules, procedure. I mean, we're not that type of company. I've never done a PowerPoint in my life, and we never did business plans. So, you know, it was really just let's just get into the room and hash it out on a consistent basis.
Let's talk a little bit about what happens when you scale the mountain that you spent a couple decades attempting to scale, which obviously you did. Um, Many founders listening to this will have spent, like you, decades building towards a liquidity event. But many who actually achieve that outcome report feeling conflicted, maybe a bit empty once they get there. And in fact, the data is pretty clear. Entrepreneurs are more likely to suffer from depression after a liquidity event as opposed to before a liquidity event. So, did you experience any of that when you took the company public and you kind of won the battle, so to speak? Did you experience any of that?
I would say that when we took the company public, we were very much still in the business, and it was exciting for us. And we did a liquidity event with two classes of shares, which was really important to us, because I know what happens potentially if you don't have two classes of shares. You can basically lose your job. So I never wanted to be in that position,
Yeah.
or any business partners. But I will say that when we stepped down from being co-CEO, that has been probably the hardest transition for us.
Mm.
And how do you still contribute in the business when you have a CEO in the seat, and you got to give that person their room to do what they're brought on board to do, and you let them bake the cake the way they want to bake the cake, um, and not having the day-to-day influence that you had before. I think that's been the hardest thing for the three of us to transition. And I would say that it's uncomfortable. It is uncomfortable. So we're still working through that. Uh, I think that we're in a middle process where, we didn't have a liquidity event, so we sold the whole company, and so we have nothing. We're not involved, and um, that's one of the reasons why we went public, was we wanted a hybrid approach to it, not just a complete liquidity event. But now it's quite difficult. It's where do you contribute and how do you contribute is
Yeah.
is and you're contributing more from a macro perspective, capital allocation, your board meetings, but you're not really in the fray in the day to day. And I think
Yeah.
that the three of us miss that.
The I usually give two pieces of advice to post-exit CEOs, and neither of these thoughts are original to me. I kind of collected them from others. So the two pieces of advice that I give is A, don't spend the money within the first 12 months, and B, whatever amount of time you're planning to take off, you should at least double it. So those are my two pieces of advice. Based on your experience, what pieces of advice would you give to a post-exit CEO listening to this?
lean into the freedom that you have, and start to explore things that you've wanted to do for a long period of time. Um, Definitely take time off, but I think that throwing yourself into something after you've given yourself whatever time you feel is right is an exciting thing. So it could be going back to school, it could be learning another occupation. It's different for everybody, but there's so many amazing things out there. I'm a big believer in traveling, so I would definitely, travel and see the world. When I took my sabbatical, I did 5 months in Africa. I drove all the way from Cape Town to Nairobi.
Wow.
I broke 5 ribs in the near the end of my trip. I was trying to make it all the way to Cairo because it was a famous trip from Cairo to Cape, or from Cape to Cairo. But it was such a magical adventure for me. It was something I always dreamed of doing, and I'm like, I'm gonna do it right now. And the most magical thing about my trip was just the fact that I did the trip.
Right.
Just the fact that I did the trip. So many things happened along the way, but um, so my advice would be do what's important to you, right? But I agree with you. Don't rush back into anything because there's a reason why you decided to do what you did, and you will only get perspective on it through a good amount of time. When I stepped down from being co-CEO of the company, I knew that I wasn't um, that well uh, physically and mentally,
Hmm.
but not till like 6 months in did I really realize what the
Yeah.
situation was.
Yeah. My experience was similar. My original plan was to take 6 months off. Then that turned into 12 months. Then that turned into 18 months. And at month 12, I looked back 6 months and I said, oh my God, I can't believe that version of Steve thought that he was ready to go back. And
Right.
then in month 18, I looked back at the 12-month version and I said, oh my God, I can't believe that version of Steve thought that he was ready to go back. But for some reasons that I can't explain, in month 18, I feel like I just like had a full body exhale for the first time in a decade. And
Wow.
I just knew that I was ready to go back.
Right. Beautiful. So
Yeah.
nice.
So let's talk about financial independence, right? Again, you've been working towards this thing for 20 years. You finally achieved that thing. When you actually do kind of scale the top of the mountain, like in your experience, what actually changes and what stays fundamentally the same?
I think that, once you have a certain amount of money, it's things don't change. They just don't change. I think that the real question, Steve, is like, what's the top of the mountain and what's your definition of top of the mountain, right?
Yeah.
So sometimes you can always be climbing, and there's never an ending. Um, so it depends on what your definition is. Uh, and I would say that for me, I like to make history, and I'm constantly thinking about that and thinking about pushing the envelope. So I don't view it as a mountain climb, and as a destination. I think that it's more about what's right for you at different moments of time in your life.
Hmm.
Um,
How did like two kind of words are coming to mind right now, risk and ambition. How did your relationship to both risk and ambition change after you basically no longer needed to take any financial risk, A, and B, you'd largely achieved many of your original ambitions. Post exit, did you feel differently about risk and or ambition?
no, the ambition was still the same. Again, to grow the company as big as we possibly can grow it. And once you become public, like then you're definitely on a growth trajectory. And you're responsible to your shareholders and people that invested in your company. So in a sense, uh, the trajectory is kind of set for you. Before it was just basically as ourselves deciding, but now you committed to something, and people bought into that vision. So you need to continue on that track. So we do need to take financial risk, right? Because as a company, you're constantly, if you want to grow as a company, if you want to stay the same and just uh, you know uh, if you want to clip a coupon, for lack of a better term,
Hmm.
um, that's fine. But if you want to grow as a company, you need to be investing in certain areas. And so it's like, capital cost is a big thing for our business. We were taking risks. We produced the first Paw Patrol movie in 2021. No one wanted to actually make the movie. We took it to the studios, and they didn't want to make it. They didn't think it was possible to actually make a feature film animated style for that age group. And so we invested our money ourselves and we started the process. And I'm super happy that it turned out like that, because we actually built up the competencies to actually produce our own feature films now.
Hmm.
Uh, and eventually, halfway through the process, Paramount came on board, and we partnered together on the film. But we had to take a huge risk on going into the film business. Now we're doing stuff in AI, and we're having to take big risks in that area. So you're constantly, if you want your business to grow and to thrive and to constantly move forward, the risk quotient doesn't end. I think when the risk quotient ends, your company will go backwards.
Outside of Spin Master, are you doing any investing now personally?
I do. I don't. I don't. I
Walk me
like.
through your decision to not do that because a lot of post-exit founders almost unconsciously kind of stumble into investing. Walk me through your decision to not do that.
It takes up so much time and energy, and I I like to allocate my time and energy to other places, because I got my fill from a business perspective from the business.
Yeah.
And I actually, if I could literally put all my outside capital into an ETF, I'd be the happiest guy ever. Because there's something to freedom of the mind and to do other things. And I spend a lot of time in my foundation, and giving back that way. And I'm inspired by the projects that we're doing in the foundation. And it gives me a totally different, it gives me an opportunity to flex different muscles in my brain, which are important to me.
Yeah.
Um, so it's a personal thing. I'm not that interested in business per se as much as I used to.
One concluding question for you as we look to wrap up. If someone was to listen to this conversation 20 years from now and could remember only one lesson from your life and your career, what do you hope that lesson would be?
Enjoy the journey. Enjoy the journey. Take time for yourself. Take care of yourself first and foremost. You're the most important person in your life. Don't put the business before yourself. And take time. I'll never forget the time that I was in south of France on a business trip, and I met this wonderful woman, and I just like rushed back because I had meetings in Toronto. I would have much preferred to spend another week with her, traveling around south of France. So, take time for yourself and really enjoy the journey. Most important thing.
I'm curious, did you learn that lesson because you kind of got burned by doing the opposite? Like, is there a time in your life where you really weren't taking care of yourself? You really were putting the business before your own interests, and getting burned is how you learn that lesson?
Yes, I got burned out so many times in my business career. I know at the 3 month mark, like I got burnt out and I would not take time. And uh, the body keeps the score. And I've
Yeah.
developed many, many, like lower back pains for years. Or, like I had like for a while, I had like a twitch in my eye and it'd last for like 2 months, or I'd have like a sore left shoulder. My shoulder, I can tell you right now, my left shoulder is sore. And I know 100% it's stress related. Okay.
Yeah.
So, when you're younger, you're just kind of like, it's just like everything's just like, it's just like you'll work through everything. But then you hit 40 and you're just like, oh, some serious things happen. And so I've had to learn the hard way. I think it's probably for another podcast, but it definitely it's shown up in my life, as a result of putting the business before myself and
Yeah.
constantly, you know, making it the number one priority, and wanting to achieve a lot, um, quickly, even though we've been on a long journey, but there was always a striving to grow and to grow and to grow, and it did take a tax and a toll on me.
What has worked for you in terms of managing yourself, managing your energy, managing your psychology? Like some things that worked for me were getting a therapist, joining a CEO support group, um, scheduled time off, yeah, things like that. At a technical level, what has worked for you as you manage your energy and your psychology as an entrepreneur?
Yeah, it's a great question. I mean, I'm a big believer in scheduling time off, something to look forward to. Uh, uh, I don't work on Saturdays. I keep Shabbat, so that's a big thing for me. I'll never forget when I started keeping Shabbat. I was at Germany in a trade show, and everybody was working, and it was so foreign for me. I was in my hotel room, and I was just reading, and everything was going on at the show, and I'm like, what's going on? I'm so curious. I can't believe I'm not there. I'm missing. But taking one day of rest every week for me has been such a blessing, and also not being on screens and stuff like that. So it's worked out great. And I think protecting your mornings has been a
Mm,
big thing for me. So I protect my mornings, and I do something 6 days a week. I either do yoga in the morning, or I go for a run, or I go for a swim. I do something to settle myself, or I journal, something for me. And then I know once I've done something for me, the rest of the day I'm okay to give it to the business and other people. But I gave to myself first and foremost, as the day started.
yeah, love that. Uh, Ronan, it was a pleasure speaking with you today. Thank you for joining us.
Thanks, Steve. Appreciate it.